Welcome back to the Alpha Stock AI. Today we're exploring one of the most effective trading strategies in Alpha Stock AI website that is based on the technical indicator stochastic oscillator. If you've ever wondered how traders catch trend reversals, time their entries and exits, or confirm the strength of a move, stochastic oscillator is the indicator you've been missing. With Alpha Stock AI, you can power up your trades by exploring over 100 strategies built on technical indicators and financial growth metrics. Customize any strategy to match your unique trading style and let AI generate in-depth analysis instantly. Want stronger signals? Combine multiple strategies for confirmation and boost your confidence before making a move. Another Alpha Stock AI's powerful feature is that you can apply the same strategy across peer stocks to compare performance and spot the best opportunities by just a few clicks. In today's video, we will start with introducing what is stochastic oscillator if you are not familiar with this indicator, and then I'm gonna show you how to apply this strategy on our website to any stocks such as Tesla and NVIDIA, and identify any buy or sell signals. Okay, let's get started. The stochastic oscillator designed to measure momentum by comparing a security's closing price to its price range over a specific period. It consists of two lines, the %K line and the %D line. The %K line is the faster, more sensitive line, while the %D line is a moving average of %K, which smooths out the noise. Together, they oscillate between 0 and 100, creating a bounded range with key zones that signal potential turning points. The most common thresholds are 80 and 20. When the oscillator is above 80, the asset is considered overbought. When it's below 20, the asset is seen as oversold. But here's where the real edge comes in. We're not using this indicator just to tell us when something is overbought or oversold. We're using it to anticipate when momentum is actually shifting. Let's start with how to identify a bullish setup using this indicator. The most basic and powerful buy signal occurs when the %K line crosses above the %D line in the oversold region, below the 20 level. This crossover indicates that bearish momentum is weakening and buyers are beginning to take control. Now, if both %K and %D have been staying below 20 for an extended period, we're talking several days, and then they form a double bottom pattern, often referred to as a W pattern, followed by a breakout above 20. That's a strong sign that momentum is reversing to the upside. For traders who want higher confidence, look for the 20-day moving average to be trending above the 50-day moving average. If that condition is met and the stochastic oscillator makes a clean move from below 20 to above it, you're looking at bullish momentum confirmed by both trend and momentum. One of the most powerful strategies is to watch for bullish divergence. If price makes a new low, meaning it's trending downward, but the stochastic oscillator makes a higher low instead, that's a warning shot. It means that while price continues to fall, the underlying momentum is actually improving. And if the 20-day moving average is still above the 50-day moving average line, that divergence becomes even more meaningful. It's often a sign that the bears are losing strength and a bullish reversal could be imminent. Combine this with bullish candlestick patterns near the oversold level, like a hammer, engulfing, or morning star, and you have a high probability entry point. Now let's talk about bearish signals, because stochastic oscillator isn't just for finding bottoms, it's just as effective at identifying tops. The most straightforward sell signal is when the %K line crosses below the %D line in the overbought zone, above 80. This signals a loss of bullish momentum and often precedes a short-term correction. If both %K and %D have been hovering above 80 for a while and then roll over forming a double top, also known as an M pattern, and break below 80, you're likely looking at the beginning of a bearish move. Again, check the 20-day and 50-day simple moving averages. If the 20-day is below the 50-day moving average line and stochastic oscillator is dropping out of the overbought zone, that's bearish confirmation. Bearish divergence is also extremely useful. When price makes higher highs, but the stochastic oscillator forms lower highs, it tells you that upward momentum is fading, even if price continues to push higher. This hidden weakness often leads to sharp reversals, especially when the trend, as defined by the moving averages, is already bearish. Finally, watch for price action to confirm what the oscillator is telling you. If you see a bearish candlestick pattern like a shooting star, bearish engulfing, or evening star while stochastic oscillator is overbought or rolling over, that adds another layer of conviction to your decision. Now let's dive into Tesla and see how the stochastic oscillator is signaling key shifts in momentum and potential trading opportunities. After logging into the website, click the AI Insight button. Then, select the stochastic oscillator as your trading strategy. You can customize the settings according to your preferences. We'll just use the default settings here. Once you're ready, click the Set button to generate the analysis. As you can see, the AI doesn't just analyze the selected indicator. It also incorporates moving averages and detects candlestick patterns to provide a more comprehensive view of the overall trend. In addition, it identifies potential buy or sell signals as well as key support levels. Below the analysis, you'll find the stochastic oscillator chart, along with moving average lines displayed on the daily chart. This visual representation helps you better understand the AI-generated insights. Okay, now let's look at the chart. As of March 24th, 2025, the stochastic oscillator shows the percent K line at 98.14 and the percent D line at 55.78. This places Tesla into the overbought zone, suggesting the current rally may be overextended. The rapid rise of the percent K line from just 9.54 on March 18th to nearly 100 in under a week reflects strong bullish momentum. However, when the percent K line reaches extreme levels above 80, especially near 100, we have to watch for potential exhaustion. Now here's the critical signal to look for. If the percent K line crosses below the percent D line while both remain in the overbought zone, that often marks the beginning of a bearish reversal or at least a pullback. For short-term traders, this crossover can serve as an early exit signal or a chance to tighten risk controls. Tesla's current price at $278.39 is above the 20-day simple moving average, but still well below the 50-day and the 200-day moving average lines. That tells us the recent price surge is a short-term reaction. We also see candlestick indication of recent bullish momentum, with a closing Maribozu and a long line candle showing strong buying interest over the past few sessions. But this needs to be weighed against the overbought stochastic reading and key resistance nearby. In terms of price structure, the recent low at $222 from March 10th has proven to be strong support. Since then, price has bounced back aggressively. But there's visible resistance near 284, and unless Tesla breaks through that level with strong volume, it's vulnerable to another pullback. The takeaway here is that the stochastic oscillator has done its job. It warned of the initial oversold rally and is now warning of potential overbought exhaustion. If you're a short-term trader, keep a close eye on whether the percent K crosses below the percent D in the coming days. That's your cue to reduce exposure or lock in gains. For longer-term investors, it is better to wait until Tesla can close and stay above 200-day moving line. Accumulating near support might make sense if you're bullish on the fundamentals, but technical confirmation is still lacking. Now let's apply this indicator to another stock NVIDIA. It shows the percent K line at 91.83 and the percent D line at 78.63, with the percent K just crossing above percent D in the overbought zone. This crossover signals bullish momentum, but since both lines are above 80, we need to be cautious. A pullback could be near. So for short-term traders, consider trading the momentum with tight stops, ideally placing a stop loss near the recent support at $115. Look to take profits near resistance levels, especially around $126 to $130. Combining with moving average lines, current NVIDIA price is at $121.40, which sits just above 20-day moving average line, suggesting short-term bullish move. However, the price is still trading below the 50-day and 200-day moving average line. That means the longer-term trend is still under bearish pressure, despite the recent recovery. So what's the strategy here? If you're a short-term trader, use stochastic oscillator as a momentum gauge. Take profits on strength and look for that bearish crossover as a possible exit cue. If you're a long-term investor, keep an eye on moving average crossovers and use dips near support to scale in, but only if the broader trend starts to shift. Ultimately, the stochastic oscillator has done what it's designed to do: help us identify where the price may be stretched and where momentum may be changing. It's a timing tool, and right now, it's telling us to stay sharp. If you found this breakdown helpful, don't forget to hit the like button, subscribe for more focused trading insights, and drop a comment below to let me know how you're approaching Tesla and NVIDIA this week. Thanks for watching, and as always, trade smart, stay disciplined, and I'll see you in the next video.